Eli Lilly out with earnings just a few minutes ago, missing estimates and cutting its full-year forecast. Here to break down the numbers, David Rick, CEO of Eli Lilly. And the first thing it's good to have you on, David, as always. Thanks for joining us.
Great to be here.
Full-year profit forecast now cut to 790 to 805. You had been at 815 to 830, and I think the street was actually above that. One thing being pointed out is insulin is capped. The price that you can charge is actually capped by health insurance at $35. The other thing that people are talking about is competition for one of your cancer drugs. So you've already got some pricing pressure, and you're pointing out competition. Do we need to do anything at this point is that the problem where the inflation in this country is coming from? Prescription drug prices? Do we need to cap those? Do we need new legislation?
Not from Eli Lilly. Our pricing in the U.S. last quarter was down 8%, as you're pointing out. I think prescription drugs are one of the slowest growing parts of the CPI. But just to unpack the numbers a little bit, because you mentioned the guide, it was an unusual quarter and a bit messy in the print, but the underlying business is super strong. Our newest products, which is really how you value drug companies, grew 20%, and we've got 5 more launches in the next year and a half. But we had a number of one-time events. You mentioned our cancer drug went generic. That's a part of the life cycle. We accept that. That's the deal with society. We invent new and useful things, and after a time, they become really cheap. And that's what Alimta is doing. It's the first-line lung cancer standard of care, along with Keytruda from Merck. And we had a number of other unusual things, of course, rate headwind, but also the SEC changed its rules about how we treat the costs of acquisition to include them in non-GAAP and GAAP accounting. And we had a big one in the quarter, a $440 million buyout of a new cancer drug. And we put that through the income statement. So it looks like earnings are suppressed, when in reality, in the past, we didn't do that. We include that in the forward guide, so it looks like a downgrade. Actually, we're at revenue. We're holding despite the rate headwind of $700 million this year. So I'd interpret the guidance as more strength in the business than downside.
If the law that, what do we call it? The Manchin law, the Manchin-Schumer law, the Inflation Reduction Act. If the provisions in there were to become law, would that affect Eli Lilly? And how would it affect it? Do you think it's a bad idea for Medicare or for the government to be able to negotiate lower prices? Because most people think that that's probably just fair game in a market system.
Well, we do oppose the bill. And I think, first, I have to say, for a long time, Lilly's been for changes, and we've talked on your show, in how drugs get reimbursed. And there's a program for seniors called Part D that this bill includes, important reforms for that we would support if it was a freestanding item. It caps annual out-of-pocket and does some other things to smooth out costs, et cetera. Those are good incremental changes. But as you're pointing out, it also introduces this concept that the government will get involved in price setting in the U.S. market, and they call it negotiation, but it's nothing like that. What they do is basically, after 9 years on the market for a small molecule, 13 for a biologic, the government tells you the price you can charge, because the alternative to accepting that is to withdraw from government formularies or face a 95% excise tax on your U.S. gross sales. So that's not really a negotiation. That's just accepting a new government price. Effectively, I think investors, and we would assume that 9 years for small molecules, 13 for biologics, becomes the end of your life cycle, like a patent expiry. So what will happen? I mean, we'll have a few drugs that will be caught up in that, and it will, dampen our forward growth a little bit. But we have a strong pipeline and growth story ahead. Mostly, I think what's damaging is it'll cause investors in biotech and big pharma to steer investment away from certain types of drugs, in particular small molecules, and mostly for cancer and specialized diseases because of how we develop them. So who will lose? More biotech will lose, small companies, and patients who rely on those new medications in future generations.